we need to know is this. I want every single trader to understand what is going on inside of a fair value gap, right? So price comes into a level, we break the level, we retest the level, and then we go higher. Why is it that some of your retests work and some of your retests don't work? Well, the reason for that is very simple. You use order flow upon the rejection. So in these wicks over here, right, in this key level, you're only looking at delta inside of key levels. You're not looking at delta everywhere, you'll get lost. You want to look at delta inside of the key levels. So here we can see a lot of red. We see a lot of negative delta. We see a lot of aggressive sellers, right? We see sellers trying to be aggressive, but these sellers, essentially were not successful. If we break above this initial break, so we break above with this candle and we have a rejection. We have these rejections. Rejection, retest, market structure shift, they all mean the same thing, and they're useless unless you combine it with what's going on the right. So you need to know that sellers here are failing. When we see a break above, this is what we call an absorption. It's an absorption because sellers or aggressive sellers have been absorbed in this region. Buyers are in control, right? That is the essence of order flow. The other thing I wanted to break down is a finished auction. So in this case, I know the numbers are very small. It says 100 for 0. So 100 on the left-hand number, 0 on the right-hand number. What does that mean, right? So the bid in this case is 100. The ask is 0. These are aggressive buyers. Now think about it from a logical perspective. If you see 100 market participants at this price, so let's say this price here is 67.50. I keep using 67.50. If this is 67.50 and you see 100 for 0 and the market breaks above the zone like this, what does that tell you at 67.50 over here? So at 67.50, 100 market participants went in hitting the bid. They tried to aggressively sell. They tried to break price down, i.e. below this level. So this is why key levels are very important, and this is why having a fair value gap or having a support or resistance is important. Now, blindly trading off them with market structure shifts, fair value gaps, breaks of structure, even EMAs, that's not viable. You need to see who's in control between buyers and sellers and trade in line with that. And so 0 for 100 tells us two things. Number one, sellers are aggressive. Delta is negative. You can see over here, red delta. But also this 0 is interesting. When you see a 0, you want to see a 0. This is what we call a finished auction. And it essentially tells us that there's no aggressive buyers and sellers trading here. There's only aggressive sellers. So a 0, for basic knowledge, basically means it's a finished auction. This indicates that buyers and sellers, aggressive buyers and sellers at that price, so 67.50 let's say, are no longer interested in trading at that price. So what does that tell you? Well, it tells you that the market's going to move in one direction. Now it's your job to figure out that direction, but by having a finished auction, it gives you a stronger indication of a reversal, of a rejection, right? Of a break, right? We're all trading reversals and rejections in some way or another. We enter and we want to see a reversal in our favored direction. Having a finished auction increases the likelihood of a reversal happening in any direction, right? It could be bearish or bullish. Now to find out whether it's, in this case, a bullish rejection higher, we see again, negative delta, a break above the zone. Sellers were aggressive, but sellers were not rewarded. Therefore, buyers, passive buyers are in control. That's what's important with the order flow and the footprint charts. So I'm going to be going over my pre-market plan, and just a long I took on the 14th of October, right? So why did I take this trade?